Hello and welcome to Homescreen. In today's episode, we're going to be talking about borderless accounts and specifically how big banks are working to take back business that has been lost to fintech such as Transferwise and Revolut. Earlier in November, HSBC US launched their Global Money Account, a free mobile-based service in which customers can manage and send funds to HSBC customers in over 20 markets without hidden fees. Today, we're going to be taking a look at the likes of Transferwise, their key features, and discuss what the HSBC product might look like. Hello, Jim.
Hey, Joe. How are you doing today, mate?
Very well, thank you. So let's just dive straight into it. What are HSBC planning to do?
Yeah, so as you mentioned above, this is a new sort of global account to support and facilitate cross-border payments. So if we think about kind of competitors are in the market there, this is like, instead of a traditional kind of P2P model of like one person sending money to another person, this is holding money in different in one account and then facilitating the payment off the back of that. So this is kind of HSBC's version of the kind of the race to get FX payments done as cheaply and as efficiently as possible, but within the kind of like wider HSBC offering. So they're, as you mentioned, they're planning to start in the US, and then in 2021 they'll be rolling out to the rest of their audiences this kind of option. The main reason why we think they're doing this is we've seen a few kind of different plays in this space over the past few years. So Transferwise like notably came in the past 10 years or so and really disrupted this model. And then we've seen from there a load of companies sort of see the value in providing really cheap financial exchange rates and being able to, instead of skimming money off the top of those exchanges, actually moving their kind of value deals to others and actually offering this kind of as a customer benefit to help with kind of other parts of, like general kind of customer goodwill and that sort of thing. So we think that they're going to get around this by using a blockchain. So if you speak to kind of anyone within our organization, someone like Simon, for example, will be really good at explaining the benefits of using a distributed ledger technology to kind of talk about how you could break down the traditional barriers to entry for FX trading, which has traditionally kind of since the 1970s or so used a network called the SWIFT. So what this does is it facilitates bank-to-bank transactions from one country to another. But there's a few ways that this could go for HSBC. So as we mentioned before Transferwise arrived on the scene, typically a lot of these payments were done via SWIFT, and then the banks would recuperate a lot of their costs on the other side to say, okay, it costs a lot of money to use the SWIFT network. Now we're going to charge the user a little bit more money to make back our costs. That's one of the many kind of revenue streams that comes from offering FX. So what we're seeing essentially is a race to the bottom as a result of Transferwise entering the market, where the price of sending, or the cost of sending that FX has gone down and down and down. And HSBC, by maybe using a DLT or maybe doing something else, would actually help them to compete with the likes of Transferwise, etc., and Revolut, etc.
You spoke to 𝗛𝗺𝗀𝗀𝗀𝗀 back in, I think last summer, and I think there's a good excerpt we can show where he's describing the kind of problems that they were trying to solve at the time and are still doing so now. So we're just going to jump into that one quickly.
For example, of a freelancer that lives in Poland, that has a client in the US, how would you get paid if you weren't using this account? Usually you will use a bank or SWIFT.
Sure.
But then if we were to build a product, when you get real bank details, so you can bank as a local in that currency, that we will solve that problem. So that's receive.
Cool.
Then holding was, we will talk with different customers. Let's say a Turkish customer that holds Turkish lira, but the Turkish lira is highly volatile. And then they will just, what if I could just hold in GBP?
Right.
And that's what they do. And then finally a spend. And once those set of customer interviews happen, that's when we decide, we should just build an account and expand what we do in Transferwise.
Yeah, so they're kind of taking a holistic approach from Transferwise. It's really, the borderless account is really an extension on top of their original capabilities, but it's still very, very helpful for particularly people who travel a lot, work abroad a lot, and want to pay people from different countries. It's not only simple and easier for them to make these transfers, but also hold these currencies. So it's really a very highly valuable extension of the original capabilities, and it has been a huge success actually. So it's no surprise that others are looking to get into this space due to the kind of compelling product that's in place there.
Yeah, and I think it's worth noting that the way that Transferwise were actually able to offer such a compelling product in the first place was by essentially what their marketing ploy for the first instance was that we're going to do something called netting, which is when you've got one holder holding one account in one area and then another holder holding another account in a different area. The idea was that those people, instead of having to swap to kind of buy currencies at different rates, would just swap those currencies around at the going rate, the mid-market rate as it's called. And then what would be able to happen then is that there would be a super reduction on costs because you've got less bank activity going on there, and more value back into the kind of wallets of these people who just swap the money. So that's kind of what the Transferwise team actually started out the business as. In reality, it's a slightly different picture, whereby it's a situation where Transferwise are doing a lot of buying or bulk buying of FX on at kind of mid-market interbank rates. So they're able to purchase the kind of the best rate possible for an exchange, and then to offer that to their customers. Because they've got lower overheads and because they're dealing with such huge margins in terms of the amount of money, it means that they're able to, it's then, as I mentioned before, it's like a race to the bottom for everyone. And what you've seen is a huge amount of people getting involved off the back of that. But something else that they're really good at is they've been able to kind of very strongly design their products as well.
Absolutely. And who would you say are the kind of key competitors in the space at the moment?
Well, as I said, it all kind of started out with Transferwise and Revolut. So Transferwise have this embedded FX package, which means that they're able to kind of build their own exchanges into other products. We've seen that with Monzo, with N26 in Germany and other things like that. But it's also worth noting that Revolut have done something very similar. They've been able to kind of offer the ability to move money just literally because of the proviso that there's not really much pressure on them to make money off this. So banks, for example, might have a pressure. They have all these desks which are doing FX trading. They're really looking at the value of these different currencies at different times. But Transferwise, Revolut, they have lower overheads. They've got more, they've got less kind of cash requirements. So they're able to just offer it at a lower rate. But it all kind of changed a little bit a few months back when Santander offered this sort of this kind of standalone proposition called PagoFX, which was their first real push into the FX market, where they've essentially gone through a similar workflow of saying, okay, we want to offer we're going to buy currencies up at interbank rates, and then we're going to move that money across on a blockchain. In their instance, they used the Ripple blockchain, which is has been fraught with its own kind of concerns and problems, but they've essentially been able to kind of start off this trend of big players playing in the FX rates and racing down towards the bottom level that Transferwise have made up. And it's been a huge success for Transferwise. You know, they were Europe's first tech unicorn, one of the most valuable companies in the world, and they've been able to do that all via this particular business model.
And you mentioned PagoFX there, Santander's proposition, and we're just going to take a quick look at that journey to see how it looks and compares to the Transferwise one, which we're going to dive into later. So what we're seeing here is the PagoFX onboarding right towards the end of it, where there's a FIDO-powered document check and ID verification, and it's a very seamless onboarding flow. And just towards the end of it as well, we're taken straight through to the key feature of the app, which is the foreign exchange transfer.
And super interesting there that they're kind of using a lot of the patterns and tropes that we've seen a lot of fintech companies using over the past few years. You know, they've got KYC, KYB done by on FIDO. The flow is super quick and super easy. The real kind of point here is to say this is something which we want to get done quickly and efficiently and technologically intelligently. And so kind of they're able to exist outside of the normal kind of Santander workflows to do that, which is super compelling.
Absolutely. And why do you think that Santander haven't integrated the functionality that we're seeing in PagoFX into the app itself? Why is it a standalone app?
I think it's the same reason why someone like HSBC would have initially gone with this connected money proposition. So as you may remember, a few years ago, HSBC launched a standalone aggregator app called Connected Money, which allowed them to kind of respond to current regulatory changes in terms of open banking, and particularly in terms of that first phase of open banking, so aggregation services, account initiation, they call the regulations called. So where they had the ability with that to then very quickly, outside of the infrastructure of HSBC, launch a standalone product which would solve this one customer problem. Santander, you could see this as their own way of doing that. So it's, let's not worry too much about the infrastructure of our traditional kind of digital products, and let's go straight to market with something which we built or we've outsourced to someone else clever to build, and then be able to allow that to help them to get to market quicker than other people. And you can see how successful that's been. Santander was the first incumbent to really face off against some of these challenges with their own product that does that thing. And they're making really smart use of a lot of the tech, as we've said, that's available to them, and also, as we've seen, using something like Ripple to actually to get around the SWIFT network with all of its costs. It's a really kind of sophisticated tech approach to how you would solve a problem like this, which is traditionally very costly, involves a lot of relationships with different banks, and as a traditional kind of it's been traditionally a cash cow for a lot of these banks. They've used it as a way of making money. And then on the other side of that, which is how do you think about why HSBC have not done that? I think it's because they've definitely kind of been burnt by the experience with connected money. So there are a lot of benefits of having a standalone app in the first instance. But what it doesn't do is it means you're severely limited, especially by the internal kind of politics and rigmarole of like being in a big bank, that the scope of it is very limited. They have a lot of requirements. And so HSBC have got around that by saying, okay, well, we're going to make this a larger part of our offering. It might take a little bit longer, but it's going to be clearly defined within the structures of HSBC's digital kind of product. More people will be able to access it. There's less people needing to download a new app to get it, and stuff like that.
Absolutely. I can see why the discoverability is so much more convenient there, because they'll just stumble across it within the app. They don't need to be exposed necessarily to a marketing campaign or any other pushes like that. So I can certainly see the convenience of it, but no doubt it's more work trying to fit it into the kind of all the tech infrastructure already in place within HSBC.
Yeah, for sure. And I think one of the super interesting parts about that is that it's going to launch in the US. So like, I think in the UK, there's maybe less of a desire to download extra apps or what have you to be on your phone. Everyone just wants all their stuff in one place. It's kind of one of the core principles of open banking, is to kind of help people aggregate all that data in one place. In the US, we don't really have that infrastructure. So people are happier to maybe have standalone products that do different things. People using Square or using Square for peer-to-peer payments. Some people might use Chime for banking. Some people might use Amex for their credit card or stuff like that. So people are naturally much happier having different products living within their ecosystem, which they might interact with one-on-one. But in the West and in the kind of Western Europe and places like that, there seems to be definitely a natural desire for these things to all exist within one product. So making this a kind of a current account or a type of account that can be accessed via APIs would make it a super attractive proposition for anyone working on kind of bringing all their accounts in one place.
Absolutely. So I think what we should do now is just take a look at the Transferwise borderless account journey, where a FX transaction is being made. So we're just going to take a look at that now. So as you can see, we're through to the international tab, and we can search by using the search bar, and we immediately get a transfer rate that dynamically updates very quickly. searching for pound there. And we can see just how quick it is. And the balance transfer can be seen, and the different transfer types laid out there. And we're seeing just how much cheaper it is using the Transferwise balance.
Super interesting how they've phrased it as like discount applied rather than kind of anything else. You know, essentially all it is money that's stripped away from the traditional process. There's no discount in place, but a slight kind of psychological shift in terms of people's understanding of what it is to use Transferwise is quite interesting.
They compare the different prices there as well. Very confident move, just showing how much money you're going to be saving using the product and where they stand in the market currently, which is very impressive.
Yeah, and potentially one that like customers will typically expect. You know, like people will typically use a service like Transferwise because of the embedded values. You know, the idea that Transferwise was born out of 2 Skype employees, like the idea that this is a tech-led financial services provider rather than a finance-led tech provider, has the kind of a set of principles which is needed, you know, like the ability to show your rate, even if it's not the best compared to others, and also to kind of show everyone else so that you're giving a fair representation of what you could get from other places.
Absolutely. So we're just going to take a look at the second part of that journey now. So the amount is entered there, very quick to load, and the recipient can be added from here. The exchange rate is quickly added, and the review date details can be reviewed. Very clean and nicely laid out. And again, we're seeing the balance transfer option there. Total fees equals 0. Face ID to authenticate. And the transfer is now taking place. Huge improvements from the last time we saw the app actually. Just the visual language and the slickness of it, all the animations. And then we're told they're done only 3 seconds. So again, it's a really kind of confident and in a nice way kind of showing off its capabilities. And we really enjoyed seeing it actually.
Yeah, and super nice to like compare that with the actual flair of like of illustrative language, as you mentioned there, the ability to show that this is a global transaction, that there is money moving from one place to another, indicates, I think, helps with like the trustworthiness of being able to know what's going on and when it's going on. It's really compelling.
Yeah, and we saw that kind of comparison screen there. Do you think that they're going to be as confident in the future displaying that kind of information as other competitors might get closer to their costs?
It's hard to know, isn't it? Because on the one hand, it's very easy for them to show that right now because they're very much leading the way in terms of like these prices. And as others come down and maybe, as I kind of alluded to at the beginning, the whole FX game relies upon you being able to buy kind of currencies at the best rates and then be able to ship them at sufficient values to make it profitable for you. So there's definitely could be the suggestion that like other banks would be able to catch up eventually and to get their costs right down to meet the challenge. In terms of would we expect them to do the same? Yeah, I would think so. I mean, I've seen organizations like 𝗛𝗂𝗀𝗲𝗲, for example, who've been able to kind of, even if they're not offering the best rates, they'll show others that are doing other rates, whereby kind of the benefit doesn't actually come from you using their mortgages so much, but more being the first port of call for people to understand what the FX rates are. I think it's likely that they'll continue to kind of lead the way in this because they're nimbler, they're a lot more cash efficient than the banks, etc. And they have a much more sustainable long-term business built around this than the banks do. You kind of get the idea that this could be something that the bank does for a few years and then decides not to do again or something like that. So it could be a very, I guess we'll wait and see, but my bet is on Transferwise continuing to have the best rates on this stuff, and they're very cash rich as well. So yeah, no, I would say that would still be the case.
Yeah, it will be interesting to see when it does come out where HSBC stand on that. So we obviously saw that journey and had some great features, very nice design, and it was also very quickly completed. You spoke to Transferwise back in June last year, I just want to know if you've got any kind of insight from that discussion as to how they could complete that and how they achieve so much.
I think there are 3 points to that. The first one is banks can always come in and offer a better rate than Transferwise. You saw, for example, with like Marcus a few years ago, their ability to just drop and dump a huge amount of cash on a problem, in this instance, easy access savers, that means that they're able to very quickly kind of get into a market, penetrate quickly and get early usage. But how sustainable that is and how willing they are to continue to dump money into a problem like that is remains to be seen. On Transferwise, yes, they should be able to continue to deliver. They run their company like a tech companies, which means continuously delivering product. As you said yourself, like the app's changed a pretty significant amount even over the past few months to reflect kind of usability and best practice from like a design perspective. But also the kind of, you'd expect them to continue to innovate on that. And then the second part of that was the fact that Transferwise have quite a substantial lobbying practice. So in different countries that they work in, they're not very well covered in South Africa at the minute because South Africa, because of the way that South African FX works, what they'll actually do is go into a country, and then when they've got sufficient volume or sufficient interest in using it, they'll actually directly lobby the Treasury or the central bank or something to do something about the inaccessibility of different financial products. So they've got no problem with forcing the agenda by going into those markets and saying, look, we are the company that are doing this interesting thing. If you want people to get the benefits from this, then this is what you need to do, and we'll support them through that. So I've no doubt that they've got a perfect balance of like long-term sustainability in the business. The technical nous to be able to do this, the product nous to build stuff like this and continue to improve it. And then third, the ability to kind of act as the sort of the lobby to make these improvements on a kind of a global scale.
And we're really excited to see how this develops between all the competitors and what kind of things we're going to be seeing. So thanks so much for that, Jim. And thanks everyone for watching. If you haven't already, go follow our YouTube channel so you never miss an episode of Homescreen. Also, if you want to see more journeys like these, they're all in our platform Pulse. Head over to pulse.11fs.com where you can find out more. Thank you guys.
Cheers, bye.